Today, I'm introducing you to one of our new strategies that emerged from our community. We've programmed it for both Pine Script and MetaTrader 5 and supplemented it with our proven extensions. In this video, I'll show you how the strategy works and how you can even implement it manually. Let's go. A glimpse at the UTbot strategy. This strategy is based on the well-known UTbot indicator. Originally developed by H. Potter, it was later improved by the developer with the TradingView name Yo Adrian and finally optimized once more by Quant Nomad. We have now combined this approach with additional filters and logics to build a robust yet flexible rule set. The first tests look promising. But how does the UTbot actually work? We're not talking about a trading robot here, but rather the UTbot indicator, which was originally developed for TradingView. This indicator identifies potential trend reversals based on an ATR-based trailing stop. As long as the price is rising, the stop is moved dynamically. If the price falls below this threshold, a short signal is triggered. To make these trend reversals more reliable, there is an additional confirmation via a simple EMA crossover. Only when both conditions are fulfilled does a signal occur, which allows for clearly defined long and short entries in the direction of the trend. How is our system structured overall? The UTbot indicator serves as the main signal giver. It's supplemented by 3 additional filters that we've implemented to reduce false signals and trade only high-quality setups. First, we use the stochastic momentum index, which only allows a valid signal during strong impulses. Second, we work with an EMA double filter. 2 moving averages must be correctly aligned to clearly confirm the trend. And third, we deliberately limit the trading hours to defined sessions and selected weekdays in order to avoid choppy sideways phases. A trade is therefore only triggered when all conditions are met simultaneously, resulting in a rule-based, fully automated system with high precision. One long trade in practice. A long signal is generated when the price is above the UTbot trailing stop, indicating an intact uptrend. At the same time, the SMI must cross its signal line from below to above, specifically below the zero line. This behavior signals a fresh impulse from an oversold zone. In addition, both EMAs must be correctly aligned, meaning the price lies above both moving averages, thus the trend direction is clearly confirmed. And lastly, the market must be within the active trading window at that moment. All conditions are fulfilled, the system opens a long position. The stop loss is set at the low of the last 3 candles. The take profit target is set at 3 times the risk, corresponding to a risk-reward ratio of 1 to 3. As soon as the price reaches a CRV of 1 to 1, the stop loss is automatically moved to break even. This reduces the risk to 0 while allowing the trade to continue. From this point onward, a continuous trailing stop takes over, following the price dynamically at a fixed distance of 1 hour and securing profits. As long as all conditions remain fulfilled and the SMI generates new valid buy signals, the system can open additional long positions, known as pyramiding. One short trade in practice. A short signal is triggered when the price is below the UTbot trailing stop. At the same time, the stochastic momentum index crosses its signal line from top to bottom above the zero line. A clear signal from an overbought market situation with downside potential. In addition, both EMAs must be correctly aligned. The price must lie under both moving averages to clearly confirm the downtrend. The trading time must also match. The signal must occur within the predefined sessions. If all conditions are fulfilled, a short position is opened. The stop loss is set at the high of the last 3 candles. The take profit target is at 3 times the risk. As soon as the price reaches a CRV of 1 to 1, the stop loss is automatically moved to break even. From this point on, a trailing stop with a constant distance of 1 hour secures the ongoing profit. As long as new valid SMI crossovers appear and the other conditions remain fulfilled, additional short positions can be opened. Pyramiding is also possible here. Time filter in use. To ensure the system only trades in the phases when the market is truly active, we use a time filter. This only permits trades within defined time windows, for example during the main trading hours of the US market. In addition, certain weekdays can be deactivated. Backtest on the NASDAQ in the M5 chart. The following backtest is based on the NASDAQ in the 5-minute chart and uses exactly the rules I just explained to you, including defined sessions, all filters, and a CRV of 1 to 3. The system trades both long and short signals and allows up to 10 parallel positions at the same time. The stop loss is set based on the high or low of the last 3 candles, and the take profit target is at triple the risk. Once the interim target of 1 to 1 is reached, the stop is moved to break even. From that point on, a trailing stop with a constant distance of 1 hour takes over. The backtest ran for a period of 4 months, from December 2024 to March 27, 2025, and covered all market phases: volatile movements, economic news, and sideways markets. The results are impressive: a profit of $10,471, which equals 10.47%. The maximum drawdown was only 1.5%, an outstanding value relative to the performance. In total, 109 trades were executed, of which 50% were profitable. The profit factor is 2.3, meaning on average twice as much was earned as was lost. Especially interesting, because of the very low drawdown, it might be feasible to increase the position size and scale the system with increased risk, depending on available capital and individual risk tolerance. The equity curve shows a steady upward movement, ideal for systematic automated trading. MT5 backtest summary. We have also implemented this strategy for MetaTrader 5, since many brokers offer a native MT5 connection and don't require webhook bridges as with TradingView. This reduces technical disruptions and increases the reliability of the system significantly in live operation. From the 1st of January 2024 to the 26th of March 2025, with a starting capital of $100,000, the system achieved a net profit of $186,599. The maximum drawdown was only 13.95%, a strong value considering the performance. A total of 175 trades were executed and the profit factor was 2.04. The average hit rate was about 37%, which is fully sufficient due to the CRV of 1 to 3. The largest winning trade generated over $19,000, while the largest loss was minus $5,788. The equity curve speaks for itself. After a longer sideways phase in the first half of 2024, the system gained significant momentum starting in October and has shown an almost linear upswing since then. The risk metrics are also impressive, with a recovery factor of 6.7 and a Sharpe ratio of 14.00. This strategy ranks among the more stable approaches. This system combines precise technical signals with well-thought-out risk management and can be implemented both manually and fully automated. It is one of many strategies that we as a community jointly develop, test, and improve. With every new approach, we expand our repertoire and boost our diversification, so we can remain profitable in any market phase. If you want to become part of this community and benefit from this variety of strategies, you'll find the link displayed at the top right and of course below this video. Good luck!